Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session this Monday, beautiful Monday afternoon. I'm with my guests, Chris and Tyson, and we're going to be talking about the truth of the Forex market. Woo! What does that mean? Well, we're going to be talking about strategies, and I think it's a great time now to talk about strategies based on how the markets have been moving over the last few months. In fact, over the last 6 months, the markets have been moving a little differently than what most of us have been hoping for, and the volume has certainly decreased. So we're going to talk about strategies, and we're going to get into that conversation right after this. Alrighty, traders. Well, welcome back and welcome to the session here for today. And we're going to be talking about strategy today. So, guys, brace yourself, get a pen and paper, get ready to take some notes because we're definitely going to have good conversation about what's going on with the market, but also how the markets are setting up. And so, when I use the word or the statement saying, that we're going to be discussing the truth about the Forex market, it's really about how we're going to be setting ourselves up for trading opportunities because let's just face it right here, all right? There's only three ways the market can, at least three ways we can trade the market. And I'm not talking about whether the market's going long, short, or sideways. I'm talking about the different phases of the market, how the market moves in these different phases. And we know that the market goes into consolidation 70% of the time. So that is one phase of the market. Then, of course, the market breaks out into these larger ranges, all right? We call that expansion phase. And then we have trendy phase as well. We have a trending phase too. So we have these three types of market phases that we need to be able to be aware of. But more importantly, we have to know exactly when to apply these different strategies, right? We just can't go ahead and trend trade right throughout the year unless we're going into a gear down, gear up type of trading approach. But if we're going to use one strategy throughout the year, we may not find the success and we may be frustrated through these periods of different phases, right? When the market goes into contraction, then suddenly a trend trade or trend-based system isn't going to be as effective as a system that is more range-bound. So we have to go ahead and acknowledge that and understand that. So with that being said, traders, I'm going to go ahead and introduce to you the panel of today. Of course, Chris and Tyson. Chris, how are you doing today?
I'm doing well, Gary. Happy Monday, everybody. Nice to be with all of you, and looking forward to maybe a patient week, but a great week and a great rest of the month to get things really rocking and rolling.
Absolutely, man. Absolutely. Tyson, how are you doing?
I'm doing good, and Gary, it's good to have you back. Good to have you back. You look great. You sound great, back and healthy. It seems like I think it's been 2 or 3 weeks since we've all been together, so it's good to be back together. And
Absolutely.
As Chris said, I like the theme today too. I like focusing on different market environments because we have some crazy moves that have happened early in the year, even middle of the year, and we're in a little bit of a consolidation period now. There's great strategies that work in this environment, but we also have to forecast where the market's going to move next. What's the environment that's going to happen next? So we need to talk about that too.
Absolutely. Listen, guys, I've been staring at the ceiling for 2 weeks now. All right, staring at the ceiling, not talking much to anyone because it's for those that don't know, I've actually had COVID-19 and over the last 2 weeks, and it's been a real struggle for me. But I'm back. As you can see right now, I've got verbal diarrhea right now. So I'm going to be talking over Chris and Tyson all the time today. So get ready for that, Tyson and Chris. I'm just kidding. But okay, so we're going to be talking about what's going on with the market, but more importantly, how do we approach trading in these type of market environments? And we know that certain currency pairs may move, certain currencies may move sideways. But in most cases, we have to realize what the condition are we trading, right? We have to realize what the environment that we're in order to be able to apply a certain strategy to that. And I mean, Tyson, you can call out a couple of strategies that are trend-based, which is consolidation, which is counter trading. You can call out a few of those of your own just on the strategies that you've worked on and that you've traded, and the same for Chris as well as myself. So, but what I'd really like to find out from both of you right now, what is your, and we're going to go through the different types of strategies, right? Let's go for breakout. What is your go-to strategy when you talk about breakout? And by the way, just to prepare everyone, I'm going to go through this with Chris and Tyson today. We're going to talk about this, but also at the end, towards the end. And so stick around, because it's important that you stick around and hear the end result is why I'm leading up to this, because we're going to be talking about when the market's in certain conditions, this is why you need to apply this strategy. So let's go ahead and talk to Chris first. Chris, what is your go-to strategy based on range-bound consolidation?
Range-bound consolidation, two definite go-tos, and I won't take yours, Gary, because I know it's yours now. But I'm gonna
No,
go.
it's yours. It's ours.
Sorry. Target trading is a great range one, because you see the levels every single day, week, month, and you see those levels get hit. When the market doesn't like to move, it's like the market is bored and wants to go somewhere to hit profit levels. Those targets throughout the week, the trading day, the trading week, the month, amazing levels to take trades and just have high percentage strikes. The perfect storm strategies for me and the equalizer have been killing it since July, like early July. I think for the month, just from the month of July to now, we're about a halfway point through August. I'm up almost 3,000 pips between my equalizer and my perfect storm strategies. So that's just nothing more than range conditions, understanding that the markets are tight, the markets are slowing down as we're ready to kind of transition out of summer, but we're still there. We're still very locked up. There's a lot of drifting going on, but those drifts are happening in these super small ranges. And I have to remember that, right now, things as they're locked up and consolidating, that's a great time to be aggressive with range strategies. But when conditions change and all of a sudden we see some breakouts, we've got to be able to switch gears. I know we'll talk about that in a little bit. But my go-to, Gary, target trading, equalizer, perfect storm, in no particular order. Those are all just fantastic strategies for anybody to have and trade with range-bound markets.
Yep. Oh, I completely agree with you. And Tyson, what is your go-to range-bound strategies?
Yeah, so it's interesting. Actually, this kind of leads into another aspect of trading, which is, so my favorite go-to range-bound strategy of all time is turning point. However, turning point's a swing trading range-bound strategy. So so if you're going to trade turning point in a very tight ranged market like we're in now, like
Right.
Aussie dollar as an example,
Yeah.
we're looking for a turn and for it to go into consolidation, but they're larger swings of consolidation. So turning point may not be the best strategy right now. What's better is a strategy like perfect storm range or target trading on a shorter time frame. So it's not only understanding the best environment, but it's also understanding the best time frames. Turning point's going to do really well when we go into those bigger ranges, right, where the market's moving in a consolidation range of 400, 500 pips for an extended period of time. Whereas a strategy like daily targets or perfect storm is going to do really, really well when we're in those tighter, like, for example, again, the Aussie dollar is a great example of how if you trade that, the targets are being hit consistently. The targets are being hit almost every day. Perfect storm range is nailing those targets, whereas something like turning point is looking for a larger range, and so it's gonna hold the trades a little bit longer. So my favorite range-bound strategy would be, depending on how my time frame, would be targets or something like perfect storm. And if we're looking for bigger ranges and bigger consolidation periods over maybe months, then it'd be something like turning point.
Okay, so that's more like the like I like to see it as the expansion, where the markets are expanding a little wider, and you get those bigger, wider ranges, and that might be something that turning point might be good for.
Yeah, where the market's moving still in a range, but instead of moving in a range like the Aussie dollar's moving in a range of 150 pips for 2 or 3 weeks, right? And so that's a really tight range that something like target, perfect storm is going to really do well in that. Whereas what turning point's going to look for is those ranges of 400, 500, 600 pip ranges, and look for those bigger ranges. And essentially, it's the difference between kind of a shorter-term strategy, short-term swing strategy, compared to more of like an actual core swing trading strategy.
Right. Okay, all right, good. Well, definitely what Tyson and Chris mentioned, I'm almost on the same boat as, well, not the same boat, but on the same page as them with regards to the strategies. And target trading is definitely one of my favorite range-bound trading strategies. But I must admit, if you take a look at the way the markets are moving of recent, I mean, we can go to a lot of pairs, and I'm going to flip to the charts right here, guys, and I'm going to go ahead and show you a couple of charts, and I'm going to take my technical analysis off here, and I'm just going to go to the charts itself. So let's see if I can do that. I'm going to have to refresh this. Okay, let's go ahead and do that. So I want to go just to the charts on its own without any sort of technical analysis, and I'm going to show a couple of examples of what I'm referring to right here when I talk about the market ranging. So let's go ahead and open up here. Let's go clear up the technical analysis here, and there we go. All right. So if I look over here and I go to pairs like some of the pound pairs, I know that pound Aussie, for instance, is something that I'm long on pound Aussie, and we're getting a little bit of a bearish move today. But if you look over here, look at the sideways action that we've got out of the pound Aussie right here. The market's really moving sideways, and it's a larger range. Then we have these tighter ranges right here. So it's got some tighter ranges. Here's another tight range that's forming right here. So we've got some tight ranges. We've got some larger ranges. But the market's moving sideways. And so when I looked at this and I thought to myself, well, you know what? We should be killing this with target trading. And I went ahead and looked at all the stats on targets over the last few weeks. And if you look over here, look at how many times we've hit that target. So we're definitely range bound, right? The markets are definitely in tighter ranges because we're hitting our targets quite frequently. So we're getting a lot of strikes right here, a lot of hits. Look at this hit. There we got a couple of hits right here. Then we got some open positions. And then the week before that, look at this. We've got a lot of hits there. Got a lot of hits there. So it's like the targets are definitely being hit. So which means that we're in no doubt, we're inside consolidated market conditions. In not just one, I just showed you the pound Aussie, but in a lot of pairs, the markets are range bound. So the question here is, we have to identify, right, Chris and Tyson, we have to identify which pairs are really range bound so we can use those strategies and apply it to that. And then when the market breaks out of those ranges, then start applying a breakout strategy or a trend trading strategy, right? You guys agree?
Yeah, I agree. And the key is, and this is going to lead back to being with us in the trading rooms, is understanding when we go from consolidation to breakout. Because the last thing you want to be doing is trading a consolidation strategy at the breakout, and then stick with that strategy. Like, oh, I'm a target trader, as the Aussie dollar rallies from mid-March to mid-June, and it just doesn't stop rallying. You can go through a lot of drawdowns, but if you're prepared for that and you understand when those range bounds might go into breakouts, that's when. So it's twofold. You got to know when to switch, and you got to know what strategies to switch to. But what I look for is essentially this. This is like the only guarantee that I know in the markets, and it was taught this by my mentor. He said, Tyson, periods and extended periods of consolidation are always followed by expansions of volatility. And so what we need to do is, the longer the contraction, or the longer the range bound takes place. So I want to participate in that, and I probably leave some money on the table by doing this. But this is the way it works for me, is if we have an extended period of consolidation, like for example, in the pound pairs and in the Aussie pairs right now, we're consolidating a lot. The longer this goes, the more I'm switching to that breakout or that trend trading strategy, because I know the break is coming, and when it does, it's going to be aggressive and it's going to be big. And so the longer we consolidate, the bigger the move, and I want to prepare for that. Now, I might have to go through a little bit of a drawdown in between there, because I might switch from a consolidation to a trend a little bit sooner. But being able to do that, I catch the big bulk of the move. And I like to try to catch the big bulk of the move. There's two types of thoughts in that too. You wait for the break and the confirmation, and then you flip your trend trading strategy on. Or you trade like me, where I'm a little more aggressive, where I'll try to forecast when the breakout's going to happen. I might go through a little bit of a drawdown, but I'm going to catch a bigger piece of the move when the move happens.
To add to that, for the Forex market, I think one thing that we continuously talk about is the seasonality of the Forex market. There is a lot of consistency around when the Forex market likes to make these big expansion cycles. When volatility increased this year, it was not surprising that it was March, and the early March and mid-March, and I'm a big believer that some of the best moves that you'll ever see in the Forex market are going to happen in April and May. it tends to like set the stage. In the last several years now, we've essentially set the stage for 3 or 4 months of trends starting all in like this cycle of like establishing tops and bottoms in March, breaking out and having some nice clean directions in April and May. And that trajectory established in April and May, last year did it on the pound pairs, this year it did it on Aussie pairs, and a lot of those recoveries that were needed. But we've seen 4 months of trends all within a 1 month transition. So as we head into wrapping up, we're at the midpoint of August here. We have this full week, next full week, and then on Monday the 31st, it is going to be I think it's going to be like a jump start into September. We're back in swing for school. We're back in swing where, whether traders are back on the floors or they're just back trading in general, it's like, the world is back to work in September. So it's also the final month of Q3. And if we're going to have, a race to the finish line and have some great profits for Q3, whether that means higher stocks or I don't know what direction I'm talking about, just an increase in volatility and better trends and breakouts coming, I would be buckling up and prepared for a lot better movement here in the next couple of weeks as we get out of August. So for traders that have been having a lot of success right now, that's awesome. But just make sure that you recognize those conditions, because when they change, it could be the need for an entirely different approach.
I agree, Chris. Actually, if I could say something too, I was watching some videos on some cryptocurrencies and some big experts in that world over the weekend. And what's interesting is a lot of these people and a lot of these big funds are looking for major breakouts and major movement, like big floods of volatility coming in after Labor Day. And so it kind of like, and part of the reason for that, and I think this year it's kind of accelerated, is there's what's called the doldrums of summer, where the idea is all these hedge fund managers go to their house in the Hamptons and they just chill out for the summer, and then they come back ready to rock and roll in the fall. I think that's going to be accelerated this year, and I think we're getting a consolidation now. That's going to be accelerated this year because of COVID. We've all been locked down, and when the volatility starts, I think the excitement in the market's going to be even higher than it has been. The movements are going to be even bigger, which means those that are prepared are going to be able to make more money. Those that aren't, it could go through some more pain. But I agree 100%. I think that we maybe have another week or two, maybe even 3 of kind of slower markets. But then once that movement really starts to happen, I think it's going to be a mimic of what we saw at the beginning of the year and that turn in March. I think we're going to get a very similar move. Now, again, which direction? And I love what we've been doing in the webinars. We've been kind of agnostic on direction. We've been saying, hey, this is what we think is going to happen. But you know what? It doesn't matter what we think is going to happen. Let's be prepared for what is going to happen. And let's make sure that we're able to make money either direction, which is going to be a big thing for me. I can't get so caught in one direction that I just say, hey, this thing is going to fall, this thing is going to fall, and go through drawdowns. I need to be prepared to make money regardless of the direction that we move in.
Right. We've got to constantly have bread and butter trades that start building up your account rather than sitting to trades and just get eat up by interest on the overnight positions.
Yep.
So I'm going to bring you guys back to this chart right here. All right. This is the pound Aussie, and it's the daily time frame right here. Now, if we look at this chart, if I compress it a little bit right here, zoom out a little bit, we can see that we've had the market dip all the way back down south right here. It created a bottom right here, and now it's trying to work its way up in sort of a correction move. But if we go to what's recently happened over the last few months, right, and we look at around about from about June, let's call it July, August. July, August was, we had these range-bound conditions. We had the market range-bound right here. Then it broke out the range, and then it started breaking back into the range. So we had a little pop out right here, and then price started working its way back up. Now we've gone back into some sort of like a range-bound correction move, because it looks like this is a nice little AB boundary going up right here, AB, and then we've gone into like an ABC correction move right here. Now, price has gone ahead and just taken out this low. Now, if we have to come back to our strategies, right, what strategies we would apply, what type of strategy would you apply, Chris, on this? If you look at the pound Aussie daily right here, what seems to be a good way to approach this pair?
Yeah, if we zoom out a little bit, I would probably look left and find those intermediate lows, and then I'd look left and find the intermediate highs. I think that right now, inside that box you have, that shaded zone, if you want to be more, and I'm going to say this is more aggressive, not necessarily with with risk or anything, but like with the frequency of trades, you're going to be trading a lot more frequently with a range bound system inside that shaded zone, versus if you want to have I think of it this way. If it breaks out of that box, we should be going somewhere else. If we break lower than that box, I would be targeting those previous lows with an aggressive trend system. If we break above that shaded box, I would be targeting, look left, go to that green line at the top, or look higher at a previous high and target that area with an aggressive trend system. So the way you see this right now, it's like, look, the playground is let's let the range system run. But when you see a daily candle closing above or below that range box, we've got to be willing to switch gears, get a little bit more aggressive, get into the trenches of the smaller time frames, be more precise, and target those intermediate lows and highs where the market has been and where it can go again. So I think to answer your question right now, I'd be trading the ranges and expecting a little bit more frequency where it's buying and selling, is taking some shorter term profits. But if we get a nice clean candle break outside of that range, we want to be looking for that next expansion. We want to be looking for that next trend. And there's a lot of ways we can take advantage of that with some precision on 1 hour charts or 30-minute charts or 15-minute charts, 1 minute charts. I know you do that all the time in your room, Gary.
Yeah. And Tyson, I'm going to give you a chance on another currency pair, but I'm just going to add to what Chris mentioned right here. So if I look at this right here, and I look at the markets going ahead and creating this this upward swing taking place right here, and we have what we're looking for is a correction move before the price goes back up again. And the reason why I'm looking for price to go back up again is because earlier on I went ahead and compressed it, and I said, look at this big downward move right here. We're looking for a correction move, right? So and if I go ahead and add in some technical analysis right here, we've come off this bottom of this channel right here. We're expecting price to move back up to the top of the channel. So the intended move for me would be expecting a bullish move out of the pound Aussie dollar. Now, if I go ahead and again, just go ahead and eliminate the technical analysis, and I just look at this box right here, and I'll say, okay, overall, I'm thinking bullish at the moment right now. So the strategies for me, guys, is this, right? Is saying that, hey, listen here, this would be a great place to start looking for adding on, whether it's a filling up a pocket on the lower time frame, but looking to go bullish on this right here. If it means target trading, adding on to a position right here, maybe looking for a monthly target to the upside. That's something that we've missed out on that we could possibly go ahead and trade back up to. But I believe that price is going to drop down and go up. So this is why a position type trading strategy would be perfect right here, because we'll be adding on, expecting the market to continue with the trend as it goes back into this purple box, if it does stay in there, and or at least if it pops out and goes back in again. We'll be expecting it to go back up again, break out the upside right here, and then go into more of an aggressive trend going long. So I would look to add right here, and then if we get picked up right here, we take profit and the market continues, then I'd look to add on a trend-based, a nice aggressive trend-based strategy to be able to trade this through this box right here and continue the rally up, because this is where we're anticipating that sort of like expansion move, because the expansion move will do something like this, where it goes into consolidation. This is contraction. Then it's going to break out, and then it's going to go back into this, and then come back and retest, and then trend. So we're going to get a nice little expansion move, and then we're going to get a nice little trend. And then what we can do is look for this A-B move right here, look for the target of the upside to anticipate where the correction move is going to be. So this is why, and the only way I would know this, the only way I would be able to identify everything that I've just said right here, is to come back to technical analysis, right? To be able to identify channels, identify trend, and then by understanding where we are in the environment, and now understanding where the market is currently right now trading and how it's trading right now, we can approach that with whatever strategy is appropriate for that condition, which in this case now would be starting to to add on to this right here and start to add on to the position. So,
hey, question, Gary.
Yes.
So I love everything you just said. I agree 100%. I think what you and Chris are saying is pretty much the same thing. You're at the low of the box. Look to trade within the box. What Chris was saying is kind of respect the box a little bit more. Buy at the lows, sell at the highs until we break. However, I think we can combine both of what you guys are saying. What if we only look to buy? Because I agree, we're bullish. So what if we only look to buy at the low of the box, take profits at the high of the box, be willing to miss out on some of the breakout, but once we get the confirmation, then turn on your trend trading strategy. So what you're doing then is you're buying now to the high of the box, and if we come back down and we continue to range, continue to buy to the high, buy to the high, buy to the high, and know you're going to maybe miss that first breakout, but once we get the confirmation of the breakout, turn on something like Momentum Max or Right Trader or something like that to ride the wave higher. How does that sound?
Well, you're perfect on the number right there, because what you're talking about is a geared down approach. So you're saying,
Yes.
take this range, whatever that range distance is, let's say it's 300 pips, right? 350 pips.
Yep.
You're saying, take this range and say, hey, let's convert this into a geared down trading approach, which means that we go ahead and take the range, use this as our major support and resistance levels, and then what we go ahead and do is we look for a trend-based strategy and trade it at the bottom of the range, trade it back up. Now, you could do it two ways. You can either do it on a trend-based strategy, on a gear-down approach, which means go down to 15-5, 1 minute time if you have to, and start buying going along to the top of the range, or simply go ahead and do what we call a position trade setup, where you go ahead and you add positions in at the bottom of the range. Don't add below it, because you want to go ahead and trade inside the range so that you've got enough leverage to say, hey, if it does stay out at the bottom side of the range, then it's time to maybe go ahead and call it a day. But if you want to go ahead and add positions in at the bottom of the range, wait for it to get to the top, liquidate, take your profit, get off the table, and then wait and see what happens at the top there. And if it shows indication that the price is going to move back down again, stay inside that range, then certainly go ahead and start adding to that. Look for the market, go ahead and break down. If it breaks up, wait for the retest, get out, trend-based strategy going long.
The thing I love about that, and this is exactly the way that pretty much all three of us trade. Now we got to be careful with this, because we want to, as we've said, as we've all said, we want to make sure we catch the next move. And so what I love about this is we can have so I would love this in setting up, just like you said, having a buy only directional bias. We get up to that top of the box, turn my strategy off, wait for a retracement or a break above, turn it back on. However, I need to be willing to flip my bias, right? So what I don't want to do is I don't want to get so caught in this, I'm going to buy only, where, and I think that box is a perfect area. If we get it, like Chris said, if we start to get daily closes below that box, then you know what? I need to flip my bias to a sell only, because we may be going back down to retest those bottoms. So I love the idea of being nimble enough to have a buy only up to the top of the box and kind of ride that range until we get a confirmation. I don't necessarily want to sell at the top of the box, but I will sell if we start to get daily closes below the box, and then I'll have a sell bias on one of my automated strategies there. I like that plan a lot.
Well, you know, the most important, and Chris, you can add to this too, but what's important about what you've just said right now, you just said, hey, listen here, I know where I am inside the environment, right? This is the environment I'm trading in, and I have now a game plan based on knowing where I am in the environment, knowing exactly how I'm anticipating the market to move. This is my strategy, and this is how I'm going to be able to apply that to the market. And that's key. You know, the one thing that I think that is starting to die out a little bit, with some of our students, is the fact that they get so dependent on automation, they forget about technical analysis. And technical analysis is so important to be the forefront and the foundation of your trading. You got to know where you are inside the environment, because systems are fantastic. Don't take that away. Okay, systems are great, but you got to know that systems are built on certain criteria, right? Is it a trend, whether it's counter, whether it's this, and you have to know to say, hey, listen here, I want to switch this one on in this environment. I want to switch this one on in that environment. And if you can become, connected into technical analysis and understand where you are in with the environment, it's going to be so much easier for you to be able to use automation to help you with your trading, instead of let trading with these automation be your first and foremost, go-to strategy.
Yeah, I
or
think
go-to tool.
I think automation and systems should be the perfect companion. So we should do the analysis first, utilize our expertise with trend lines and candlesticks and Fibonacci's and wave analysis and all of that. And it doesn't take, and some traders are like, man, that seems like so much. But it's not. Do that on daily charts, weekly charts, monthly charts. Get your longer term directional bias. Get a plan in place. And even if you're longer term, like for example, Pound Aussie, we're bullish. But we have a plan where if it starts to break down, we'll become bearish. But now we know we're only going to buy as long as we stay in this box or above the box. We're only looking to buy. Let's now use our companions of the automation, turn it on until something changes. If something changes, we'll then flip the automation. But we can't just throw on a strategy and just set and forget. There's some strategies out there like that, but I've never seen a strategy be able to outperform us if we put some analysis together and then we deploy the strategy in the right direction. We should be able to outperform any strategy out there.
Absolutely.
I mean, the companion, the assistant, the automation and human component, like, we work really well together. I don't think robots will ever replace. If we want to optimize results, I'll say this: if we want to optimize results, the robots will never replace us.
Yeah.
Like, having that discretion makes a big difference. I will say this:
Yeah.
all of this we're talking about, switching strategies and being mindful of where we are in the markets, having some technical analysis. I would say right now, a big takeaway for everybody that's watching is also one word, and that's patience. Like, right now, if you don't see something you think is a good looking trade, sometimes not trading is trading. Sometimes not trading is the best thing you can do. If you're not fully comfortable, fully confident in trading right now and have a reason to do so right now, it's okay to wait. I would say if you give this market a little bit of time, I'm talking literally the next week or two, you will be amazed with what is opening up. I mean, I'm talking about, I'm looking to probably start waking up again at 3, 4 in the morning when volatility changes. I'm looking at breakouts where it's like we're going to start deploying and being way more active than what we have been. I mean, I have been waiting for probably 4 positions where I've just been sitting and waiting and scaling, and that's fine. Like, those are position trades. I got robots running in the background. But if we're patient, the trades we're talking about today, the setups that Gary showed on the screen, those trades come to us, right? You can, if you are simply a trader, like, look at your charts once a day at 5 p.m. and see what price is doing. You can see some very clean areas where trades are wide open. Like, this is a bullish trade. There's a bullish confirmation. Sure. It has a lot of room to run for that next level. That's a great looking trade. It's a bearish breakout. There's a nice clean bearish candle. It's wide open, running to the downside. Those are really clean. So, I mean, if you're not in the trenches with us every single day, which you certainly can be in our trading rooms, right? We can do all this together. But right now, if you're not fully immersed in following every tick and every pip and every level that you're possibly trading, it's okay to be patient. It's okay to not have a super active day or super active week, because I would say in the next 4.5 months, we're going to have plenty on our plate to be juggling and and handling.
It's actually interesting you say that, Chris. One of the biggest hurdles that I had to overcome as a trader before I started learning how to trade like a professional was, one, I needed to see. I thought that I could dive into this business and just like, oh, I'm going to start making money, right? That's because that's what you do. And obviously that's not what happened. Every trader has kind of their horror story and their war stories that they went through. But for me, and I think a lot of traders are like this, I had to see a winner before I was going to become a winner, right? I had to see somebody win. So getting a mentor and watching it be done was important. Not just the education, but watching it actually be done was important. But then second of all, I had to learn that, I was in this mentality of, well, I'm a trader, right? I'm trying to be a trader. This is what I'm going to do for the rest of my life. This is the thing that's going to, take me to, the financial promised land. And as a trader must trade, which means I need to be in a position. And that's not the truth. The trader doesn't always need to trade. If there's not a trade, if there's not a way to allocate resources, then you know what? Stay on the sidelines and be patient. Wait for the best trades. Don't fight it. There's always going to be great opportunities. So I love what you just said, because I think a lot of new traders get stuck into that mentality of, well, I'm a trader. I have to have a trade on. I've got to trade because I'm a trader. If I don't have a trade on, then what am I? Well, I would say you're patient, you're disciplined, and you're waiting for the best trades. So don't get sucked into this mentality of you have to trade. Wait for the best trades, because they're going to present themselves, especially very soon in this environment that we're going into.
Absolutely. And I'm going to add this, and I'm going to flip over to another chart. And you know what? I don't care. We're supposed to be done in 30 minutes, but I think this is such a great conversation. I think we want to continue this conversation. So this conversation is going to continue, but I want to say this. Traders, don't spend so much time trying to take a trading automated system and run it on buy sell both directions, right? Run it on automation and try and expect some good results out of that, because remember, these systems are based on different market environments, right? If it's a trend-based system and the market's in consolidation, you're not going to see the results. Stop spending time trying to figure that out. Let us do that job for you, because that's what we're here for. What you need to do is focus in on your technical analysis. Improve in your technical analysis. Improve understanding where the market is with channel lines, with the support and resistance, Fibonacci. Understand where you are with that, because that's going to be your key to success, not the automation. All right, the automation is going to be the support that's going to help you be able to trade when you can't be around the computer and be it'd be around all 24 hours for you and do all the trading for you once you pick up the right direction. But more importantly, technical analysis is going to help you become a better trader, not automation. Automation is going to help you be consistent and place more trades, but it's not going to make you profitable if you just run it on full automation. You have to be able to identify directional bias and then deploy it in that direction. Now, this is what I'm going to say right here. This pair right here, take a look at this chart. This is the Euro New Zealand dollar. You know, guys, that I've been looking at the Euro New Zealand dollar a while back when I've been saying buy, 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 buy. I've been a big buyer. I had a lot of equity, in this trade. And it's gone ahead and traded higher than, I actually took profit out way before it got to the top where it is right now. But I got out, I made some good money on this. In fact, I made 19% in just 1 month just on this. I'm talking about a live trading account, and I profited on this. I was very excited about it. The market did go up a little higher though. But now if you look at this chart right here, this is the daily chart, and you see how the market's set up right here. We've got this big downside move right here. The market's gone ahead and moved into a contraction phase. You can see right here, this is where I was buying off the bottoms right here, saying buy, 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 buy. And I got to a point where I'm saying, all right, I'm out, cashing out, and price did move up a little higher. But now we're sitting at a situation right here. I'd like to know your views, Chris and Tyson, right? What is your 2 cents on this with regards to how you see the Euro New Zealand dollar trading right now? Tyson, you go first.
Yeah, I think this one's pretty obvious. The more time you spend in front of the charts, the more you become your own technical indicator. And I've kind of prided myself in my career on trying to look at charts without putting on any indicators and kind of understanding what's going on. But what's nice about what you have on your charts right here is it's so obvious to me. First of all, we're sitting at, I don't even have to go to a smaller time frame. I can pretty much promise you we're sitting at, a 10-minute, 30-minute, 1 hour level of supply, near a level of supply. We've got bearish divergence setting up. It's not confirmed, but bearish divergence kind of setting up right now on that oscillator down there. And we've got missed targets below. This is you look for trend line breaks, you set up your sell only automations, and you sell down to some missed targets. Pretty easy, pretty obvious trade for me.
But you know what, Chris, I'm going to give you a chance right now. But you know what is really key with what Tyson just said right now? He just, on a glance, very quickly, he looked at it. There's not a lot of stuff on that chart, but he looked at it and he said, I know already what to do. I can see straight away what to do, and it's a no-brainer. Go for it, Chris.
Yeah, I mean, I think given how nice those lows formed right around 70, 200, equal lows we saw. I mean, in the trading room, we identified equal lows. We saw a nice little head and shoulders pattern to the upside. It was a bullish head and shoulders, broke out of that neckline. When it ran up towards 78.50, that to me was my measure move looking for profit. I said 8,000 is a nice round number to take some profit at. A surprise to the upside. I know the RBNZ has been a little bit behind this. But as far as where it's gone right now to where I'd like to trade it in the near term, I would be right there with Tyson looking for some movements coming back down to a little bit more balance. I would say that, maybe the medium term is I would still look to stay on New Zealand dollar weakness. I mean, keep in mind, we just went from 6,800 to a flash crash high of almost 2.0. So if you're looking at a risk-off environment, we will certainly see Euro way stronger than the Kiwi here, maybe in the next 4.5 months. So if we have any short-term corrections, that's great. But if we came down to enticing levels at, back to 76, back to 7,500, I think that's great for a corrective phase. I think that's good for some retracement profits. But I would look at more of a medium term of I would like to see how high this thing wants to run again.
Yeah, okay. Chris, I agree 100%. I think that 100%. I think this is a couple week to maybe a month long retracement.
Yep.
However, I'll just go on record. I'm looking for a 2008 repeat of the Euro New Zealand. This thing capitulating higher aggressively within the next 12 months.
All
right. Now let's take a look at the chart right here, and let me break it down. Let me go ahead and throw in some technical analysis right here. Get all technical with everyone right here, and you can see that we're inside this inside channel right here. So we came off the bottom. This is why I was buying off the Euro New Zealand dollar at the time there, because we hit the bottom. And so I said, all right, we should be going back up again. And I bought in. I used what we call that counter trend, which turned into a smaller trend to the upside. Just buying down here at the bottom, buying at the bottom right here until price started working its way back up again. Now, if we take a look at the trend right here, we can see that there is definitely, we're going to come up to, well, at least we've gone up to a bit of resistance right here. We had some wave on highs. Let me just go ahead and compress it a little bit more. So we had some highs right here that market went ahead and retest right here. And so just like we saw the market dropping south right here and then looking for some sort of correction, this is a correction move. So we're in a correction move going long. And so there is an anticipated, whether Chris is right and the market's going to continue to move north, there's definitely a retracement or a correction due before the rally takes place. So Tyson, myself, thinking that there's going to be a bearish move. I like the way Tyson picked up the divergence. That it's not confirmed yet, but it certainly is looking very good for sellers right now, even if it's in the short term. You know, a sell off to the downside. Also, the big thing here is if I take off the technical analysis and just look at this box right here, this box is actually identifying. Oh, I can't do that without. Oh, my bad. So this box is identifying that there is resistance coming off over here. It's support down here. So I would be looking to sell, let the market go down, and if it goes back up and trades back up again, when it comes back to retest, get the heck out of Dodge and just trade it trendy. So just go ahead and trend this. But I know that if the market's going to hold resistance right here, we should be heading back down south into the bottom of the box right here, even if it's just like halfway to that to the what we call the expansion level. Then we could at least get some profit on those. If we take a look at how much the market's moved already, this box is around about, let's take a look right here. We've got this box. This box is about 1,075 pips. So we're looking at about 500 pips at least for a mid part of the move to the mid part of the trend right here. In fact, if I take a look at this, guys, I've got a fib going up right here. There's a fib going up right here. Here's the 1.618 right here. And so if price is going to come back, if this is going to be a wave structure, then we're looking at this being like wave 1, 2. This will be 3 up here. This will be 4, and this will be the 5th wave right here. So what's happening is, and let me drop another fib. If this is close to the 127 right here, man, we've got a good chance of price coming back down again. So let's take a look right here. If I go ahead and put in another fib right here, connect the bottom right here, go to that 3rd wave right here. Look at that. Right there at the 127. So right there, the 127, price is going to come back and try and work its way back down to the 4th wave, which is right here. And that's 50% of that range, which is the expansion level. And then turn around, and if we're going to start heading north like Chris believes that the market may do, then maybe that would be the turning point for the Euro New Zealand dollar. So I know this though.
I think we're all on the same page. I love the sell zone right now. And again, would I start selling right this minute? No, but would I start deploying perfect storm, right trader, turning point, all those to the short side, and let the strategies assist me on the downside? Absolutely. And I'd keep them on down to about 76. At 76, and between 76 and those lows, turn on buy only up to about 84, 85, and just let it go. So basically have a bearish bias down to 76, hit 76, have a bullish bias back up to about 84, and then see how the market kind of adjust itself from there. Because I think that 84 we could see some consolidation, but long term, I see this thing breaking above 2 pretty aggressively in the next 12 months. But I think that's the game plan for the next few months. I love that game plan, guys.
Take a look over here on the weekly targets, right? The weekly targets. Look at the euro crosses. So we've got 2 of them are hit, but look at the others. They're pending. They're looking for a bearish alert, which means they're looking for overbought conditions, which means that we've seen some sort of rally in the euro crosses. But now what we're anticipating is a correction move on the euro. In fact, and it's not just 1 or 2. It's like 4 of them, 4 euro crosses right here, indicating that price is getting to an extreme overbought, which means that we expect some sort of correction move. And that's on the euro crosses. The pounds are really starting to break out. So the pounds are really starting to head south based on what we're seeing right here. So we've definitely seen a shift in momentum. And this then reconfirms all the technical analysis that we've seen so far on a lot of the euro crosses right here, specifically on the daily, indicating that there is a correction due. Correction is due. Here is the Euro Aussie, and Euro Aussie's already started its Euro correction right here. So this may mean, Chris, and I'm just saying this right now because you did mention about the weakness out in New Zealand. This may mean that we just might get weaker Euro than New Zealand. That could drive it back down in that correction move, but still stay weak on the New Zealand. And by the time the Euro starts picking up ground again, then we could see that rally taking place. And this could be a shift of safe haven because Euro is part of the safe haven basket, right? So we've got the JPY, Swiss franc, Euro, US dollar, and that could be a shift in the move because
and another
I
thing
think
we
at the
got to
moment
watch
right
out
now,
for, guys, is a shift in the risk off risk on equation when it comes to specifically the New Zealand, because I'm telling you, this multi-decade long worth of cheap money is starting to creep its head into inflation. And if that's the case, the New Zealand could continue to see some massive strength, even if we go through massive sell-offs in the market, which is kind of counterintuitive. But because of this food inflation, and we're starting to see inflation, we could kind of be in a worst case scenario eventually, where we're starting to see hyperinflation along with almost no real economic growth and no real income growth. That is a horrible situation, but we're starting to actually see it right now. That's the environment we're in right now. And if it lasts longer than a few months, then it could get really, really bad, because that means people are spending way more money at the grocery store, but they don't have more money in their bank account. The only reason why people have more money in their bank account, by the way, is because they're making more money from the government. Think about this. I don't want to digress, but I want you guys to think about this for a second. Why is the market went up? Because disposable income has dramatically increased. Think about this for a minute. Somebody who was maybe making, let's say a household of two individuals. They were maybe making, let's say they were making $55,000 or $50,000 together. One was working kind of part-time, the other was working full-time, maybe $50,000 or $60,000. That's the average household income. Now, with the government assistance and government programs and unemployment, now that went away, right? But they're thinking about rolling this back out. Up until August, that person was on pace. That couple was on pace to average about $75,000 to $80,000 tax-free money, because the $600 a week that both of them were getting, and the $1,200 stimulus checks that both of them got also. And then if they got some money, if they had some kids, we're talking about $75,000, $80,000 worth of tax-free money. So we're the most homeowners out there, most households actually have a massive increase in the amount of disposable income they had over the last few months. Now, that can't last, because we have to pay for that somehow. We have to, those jobs, they have to go out there and make their real income. Either that or the government takes care of everybody forever. And that, my friends, is not a good plan for anybody. So it's interesting. It doesn't shock me that the market continues to rally up because disposable incomes on the back of the government. However, that's going to have to change. And the economy is either going to have to support itself, or we're going to have to be supported by the government. I hope that the economy supports itself eventually.
Absolutely. Hey, Chris, we're gonna close off, but I want to close off. I want to give you an opportunity if you want to speak anything or say anything about the pairs that we looked at. You want to add anything to that before you do your final closing?
Yeah, well, number one, it was great to have this session with all three of us again together. Look forward to many more, especially over the next couple of weeks. And again, people should be tuning into this. Spread the word around for this Ask an Analyst session. We're talking about all things markets. We're talking about any strategy. We're trying to highlight some of the great pairs. But like this week, look, the markets may not be moving a ton. It might be a boring week. I mean, we look at the high impact economic news. We have OPEC meetings, some RBA minutes, and some PMI numbers on Friday. It's like it is a very light calendar, and I expect that to be kind of the tone until August and September give us this like little post-summer surprise. So I think patience is going to be the key. I think being open-eyed, like wide-eyed for the next couple of weeks to make sure that you're not missing out on when volatility changes. You're not missing out to notice when a breakout happens. You're not missing out to make sure that, highs and lows are going to start forming. If we have, we all come back to this. If we have technicals, we should pay attention to that. If we're nearing tops and bottoms, if we have divergence, it might stretch and go a little bit further, but it's probably still going to balance. I mean, it has been a really odd year where these extremes have been more extreme than I've seen in the past. It's taken longer for certain trades to work themselves out. But at the end of the day, as this market gets fueled with fundamentals and it starts moving faster, it's still going to be knocking off and checking the boxes of technicals. It just happens faster. So it's a great time to be in a trading room. It's a great time to make sure that you are nimble and not overly committed. Make sure you keep some cash and margin available to trade when you want to be more aggressive, when you see that things are lining up and it's time to start taking action. So I know that's a lot of stuff there, but I mean, a great session for us. Hopefully everyone out there is enjoying it. We're going to keep doing this stuff, but it's like there are so many good opportunities over the next couple of months. Don't cut yourself off like right now because you're overcommitted. Like, be ready for a lot of great stuff and be ready to stay neutral. But man, it's going to be a great time to be aggressive. I think there's a lot of big payouts coming.
Yep, absolutely. Tyson, any final words?
Yeah, I think Chris said it all. I kind of took my final word by talking about the New Zealand and inflation.
You did.
Government takeovers and all that kind of stuff. But yeah, I agree with Chris. The point is again, spread the word. I think these sessions are absolutely some of the most valuable things we do. We talk about all types of market. We try to keep our students up to date. And hopefully by watching these sessions, it builds the confidence in the skills that your experts, your mentors have. And then you say, hey, join us in our trading rooms. Figure out what courses best fit your personality style. And because I'll end with this. Anybody who's watching these videos or comes to our webinars or whatever it might be, if you watch them, I believe for longer than 10 minutes, they have the trader seed. And that never goes away, guys. It never goes away. So you might as well surround yourself with some of the best and do it right. That's the last thing I'll say, I guess.
Yep. And I'm going to go ahead and finish off and close off with this and say this is important, right? Number one, technical analysis. Absolutely. Listen here. I've been staring at the screen or staring at the ceiling for 2 weeks. I'm going to speak right now, right? And I'm going to say a lot of stuff. But I'll try and keep it as short as I can. But this is the deal right here. Technical analysis is absolutely key. You have to know how to be able to do technical analysis. There's too many students coming through the education that are taking a very quick look at technical analysis but moving straight to automation and thinking then that's the holy grail. That's going to help them to make money and be profitable. I'm going to say this. You have to have different trading strategies in your toolbox. You've got to have different trading strategies in your toolbox. So don't be a fool and think that trading just one strategy is going to be enough to be able to get you where you need to be. You have to have different strategies because the market changes all the time. We have different environments that are suited for different strategies. So using technical analysis as your foundation, as your base, to be able to understand which type of environment that you're trading, and then going ahead and applying those different strategies in that environment is going to help you become better traders and more profitable. Now, if you're struggling with that, just like Chris and Tyson said, get into the trading rooms, guys. This is why we've got these trading rooms. We've put a lot of emphasis here in 2020 to build these trading rooms so the traders can get involved in what we do, pick up some ideas of exactly how we trade, how we look at the market, how we review the market. All of that information is vitally important to your success. If you want to get to the next level and you want to increase what you're doing currently right now and you're struggling with certain things, get into the trading rooms. It's really, really critical that you're part of a community of traders, and that's what the trading rooms are for. So get into the trading rooms, guys. Listen, we love the sessions. We love you guys. We appreciate you guys. Thank you for listening in, and hopefully we'll go ahead and continue these as we go forward. Right now, we absolutely got it planned, but of course, your support is important. So share the video, like the video, comment on the video, go ahead and give it out to everyone else that you know. Let everyone know about the AAA session. Also, subscribe to this channel as well. If you haven't subscribed yet, go ahead and subscribe to the channel so we can make sure that you guys get the videos that we post as soon as we post them. So, with that being said, once again, thank you very much for joining. We'll see you guys next week as we continue these sessions. And from the team and myself, cheerio.